Hey, here back again with another video, and in today's video we're gonna be going over my liquidity grab strategy, and I use this strategy to like pass my Apex challenge in 2 days. So yeah, I'm gonna walk y'all step by step of like, you know, everything that I learned so far and like how I go to apply it in my own like kind of like style. But before we even get into it, I just want to put out a quick disclaimer that, you know, liquidity is always in the market, right? Like no matter what symbol you trade, no matter if you trade in forex, futures, crypto, options, stocks, whatever the case may be, liquidity is always going to be in the market, right? As you know, like, you know, there's like terminology like ICT, there's terminology like CRT trading, there's different types of like ways how like you can trade liquidity. So I don't want anybody coming in this comment section and say, oh, you're trading ICT, or oh, you're trading this, or oh, you're trading that. Like even if it is the same like concepts, I'm not gonna label it as like ICT or like a certain concepts. To me, it's just like simple liquidity, right? The way how I did learn more about it is when I looked up CRT trading. So like shout out Romeo, I believe that's his name on Twitter. You know, I really stay out the mix. I used to trade liquidity on gold, just strictly on like lower time frames, and yes, I was successful with it. Like I passed challenges and I made a withdrawal, like just strictly trading 5-minute liquidity on gold, right? But my main thing was I wanted more of a defined way on how I marked up my zones, how I can determine what is like the A+ quality setups, what is the B+ quality setups, what are the C+ quality setups. I want to be able to like get like the good quality setups, right? So that's what made me go ahead and research more about it. And I looked up CRT trading on Twitter. You can go ahead, there's like a lot of people trading it right now, and that's kind of like the terminology that I'm going to be using for this video and what I'm using right now. But I'm sure like it's related to like some ICT stuff too. I just really never took the time to like go really in depth with it. I just saw like a base strategy and I was like, okay, let me go ahead and test this out. It has something to do with liquidity. Okay, I see success with it, let me go apply it. Boom, I applied it to my accounts and I got funded, right? So shout out to all y'all, like, you know, who's actually like teaching something like in this industry. That's the one benefit, that there's always information and knowledge within this like industry. But yeah, just too much drama, bro. That's why I just really stay out the way, bro. I just want to be able to trade. I want to be able to present things to my community that can help them, and we all just, you know, win, bro. It's like all that drama stuff, like y'all, bro, y'all got that, you know what I'm saying? So yeah, I'm not gonna waste any more of y'all times, bro. We're gonna go ahead and hop right into this, and we're gonna be starting with this example right here. So let's focus on this candle right here that I zoomed in on. So basically the gist of it is I'm gonna be focusing on the highest point of the wick, and then I'm gonna be focusing on the lowest point of the wick after this candle close. So let's say boom, you have this candle closure, right? So what I do is I take my date and price range tool, and if you want to figure out where that is, basically you can go to your tool section. I believe it's under like the measures tab, and then you could like click on this date and price range tool, right? So if you follow my cursor right here, I'm gonna go ahead and start at the very lowest point of this wick. So I'm gonna move left a little bit and start my point right here, and then trace it to the very highest point of this wick. And then what I'm gonna do is I'm gonna drag it over, right? And yeah, after all that's said and done, we're gonna be seeing where is liquidity sweeping, right? So is it gonna sweep the high of the box, or is it gonna sweep the low of the box after this candle is done printing, right? So as you see in this example right here, after this candle got done printing and we have our analysis, you can see that liquidity went way to the upside, so it went to the top of the box. Now we're going to be anticipating sells. So what we're going to be looking for is within this area right here, or even like this area, we're going to be looking for an entry. That's when we go to like the lower time frames. I'm gonna get into all that like I said earlier, but so we're going to be looking for a breaker structure somewhere in this area on a lower time frame, or a time frame lower than what you did your analysis on, and then we're going to be anticipating a sell. So once we get an entry, let's say like right here, and then boom, we're gonna take a sell, and as you see, look what happened next, bro. It targeted the other side of the box. It even targeted like the middle of the box. From this point on, where price was, and when it took out the liquidity and we got an entry, you could just see that a big move came down. Now I'm not saying this always happens, right? But the chances of it taking out liquidity and then trailing to the other side when you have a valid zone, the chances of it like trailing to the other side like goes up by a ton, bro. So once you have those like chances on those odds in your favor, that's when you can like get your entry, and then like have your TPs like right here, or even if you want it right here, or even if you want your TP like down like further at another zone, like you can do other analysis if you want. But like I said earlier, I'm gonna show y'all everything when it comes to like TPs and stop losses and entries and all that stuff too, right? But for the most part, this is like the only analysis that I truly do on like a higher time frame. So I'll just literally mark up the areas around the wicks, and then I'll wait for liquidity to get swept, and then I'll get my entry, trail it back down, and boom, take profit, right? Or stop loss, you know what I'm saying? So yeah, going down to a lower time frame, this is going to be the 3-minute time frame, followed by the 4-hour liquidity that we just marked up. So basically up and right here, this candle right here, like this green candle right here, is going to be 6 o'clock a.m. So from this point on, we are officially going to be looking for like liquidity sweeps, right? When we marked up the box on the 4-hour time frame, that candle was the 2 a.m. candle, right? We are going to be looking for entries and possible setups as soon as this is done closing, right? So as soon as this is done closing, it's going to be 6 o'clock a.m. because we're on the 4-hour chart. Like, you know, the candles print every 4 hours, right? So with that in mind, right? So once you see this candle right here happen at 6 o'clock, you should know that, okay, from this point on is when we're going to start looking for liquidity, right? That point on is where we're going to start looking for liquidity. We're going to worry about nothing over here because this is like the analysis portion. Now we're looking for liquidity being swept up. So before the liquidity got swept out right here, you got to look left, and your price went up, it came down, it went up, it came down, right, with a push up. So now we are going to be waiting until price breaks structure, right? Didn't get the breaker structure here because price did another retracement and then it did another push up, right? Now one thing I do want to mention is there is little mini like breaks of structure within this area right here, and this was the main part that was like really like tricky to me, because I would see a breaker structure happen within this little area right here, and then I would get in a trade and then you could see like it still went up, but I didn't really have any base in my structures. As we have structure down here that holds way more weight compared to the little one that was broken right here. So just because you see a break doesn't mean that it's gonna retrace and then like come right back down or go right back up. You know what I'm saying? You gotta actually like really filter out the good ones and the bad ones, which is like the trickiest part. But I'm gonna try to make it more simple to you, show you what I do when we talk about the entries. But as you see, like we still looking for more breaks of structure. Now there is structure down here, right? Remember, just like the last example, there is structure down there, but you also have to realize like how much is price moving. So as you can see from this area right here, price was moving a lot. And what I mean by that is when you see from this move right here, you just see a bunch of green, bro. You just see a bunch of green, like big body candles. You can see it like really have that bullish volatility, right? Compared to over here. So when you realize, and this is how I was able to kind of like filter out the good ones and the bad ones, right? When you have like smaller type of like movement like this, like barely any movement, price still have a lot more room to go up, which it did over here. That's why when it broke this little structure right here, it didn't retrace and come back down with the initial move that we're like anticipating. It went up and we had to look for a break over here. But since this one is showing way more volatility, way more bullish pressure, way more moves and all that stuff, we can go for a smaller pullback compared to the smaller pullback that was over here, right? So once you see all this pressure, then we can start seeing, okay, hey, price is like breaking a major structure, which is going to be right here. So now when it comes to my actual entry, right, what I like to do, me personally, this is just me personally, I like to use Fibonacci's. I like to just use the basic Fibonacci with like the 50% tool, right? So it's basically, if you want my settings too, I'll go into it real quick. All I have is 0, 1, and 0.5. So I like to start at the very top of like wherever the big move is starting off from. So in this case is right here. Then I like to like wait until I get a big like retracement back into that area, which happened right here. So now my initial entry would be right here at this 50. My stop loss will be at the high, and then my target will be a 1-to-1, right? So because mind you, I still go for 1-to-1s, but this is how I personally do it. I like to take partials at my 1-to-1s, and then I like to let the rest run. So once I get my 1-to-1, as you can see, it came to 1-to-1 about like right here, right? So I take off like, let's say 50% or like 30% of my 1-to-1 just to like secure something, and then I'll go ahead and target for like a 2-to-1 or 3-to-1, or just depending on the box, right? So as you can see from the box, you can target the middle of the box, which will be right here, or you can even target like the end of the box, which will be right here. And as you see, price came back down. So but like I was saying, the actual gist of the strategy is you see a liquidity sweep to like the upside or the downside, then you're going to wait for confirmation for your entry, which is right here, and then you're going to target it back down for a reversal, anticipating the opposite end. So that's pretty much like the base of the strategy. It's something like simple, like very simple, but you're still going to have to put in like a lot of work when it comes to like the actual analysis with your entry, right? So let's go ahead and get in more depth on like how exactly do I trade this step by step. So let's start with the analysis, right? When we look for the highest point of the wick and the lowest point of the wick, and then we go ahead and make that box around the candle, I'm looking at higher time frame analysis on the 4-hour chart, the 2-hour chart, and the 1 hour chart. Within these charts are going to be different candles that I'm looking at specifically and doing like analysis on, because I'm looking for volatility with liquidity, right? So alongside liquidity, you also want some volatility, because that's going to be able to push and make those moves that you're looking for, right? So starting with the 4 hour chart, the candles that I'm only going to be analyzing are going to be the 10 p.m. candle, the 2 a.m. candle, and the 6 a.m. candle. Mind you, this is the analysis part. So these are going to be the candles that I'm placing the high point of the wick and the low point of the wick and getting that box around it. And remember what I said, whatever candle that you're looking at for your analysis, you're going to be looking for the closure and then look for your liquidity, right? Moving on to the 2 hour time frame, the candles that I'm going to be focusing on is the 4 a.m. candle, the 6 a.m. candle, the 8 a.m. candle, and the 10 a.m. candle. And last but not least, on the hour time frame, we're going to be focusing on the 7 a.m. candle, the 8 a.m. candle, the 9 a.m. candle, and the 10 a.m. candle. So on Nasdaq, the 4 hour time frame, what candles are we going to be doing our analysis on? The 10 p.m. candle, which is right here, the 2 a.m. candle, which is right here, and then the 6 a.m. candle, which is right here. As you can see, these candles do overlap each other. So let's say I do my analysis on this 10 p.m. candle right here, right? So price took out the liquidity to the downside first, right? But within this big move, you may have not gotten like an entry. You may have not gotten like that breaker structure you were looking for until liquidity got taken out to the downside down here with this candle, right? So they kind of like follow each other. The most important part of like this whole system is the actual entry, because this did give you a liquidity sweep to the downside over here, and it did give you a liquidity sweep to the downside right here. But let's say you entered in the trade right here, but it still kept going down. That's a poor entry, you know what I'm saying? So you need to have that top tier entry so you can avoid making mistakes where you get in, like let's say over here, and then it comes like down some more, and then you like have another liquidity grab, and this is the initial move that you wanted to follow, right? I'm gonna actually show you on like a lower time frame so y'all can see more in depth. So we're going to be looking for trades around 2 a.m. because remember I said the analysis candle plus the time frame that you're on is going to equal to whatever time you need to start looking for entries. In this case, it's going to be 10 p.m. plus 4 hour time frame is going to be 2 a.m. So boom, now that we see like where the 2 a.m. candle is, which is actually this mark right here, where did liquidity go? It went to the downside. But as you saw from that example, it just kept going straight down, straight down, straight down. You didn't really have a valid entry, because you see price comes down, it comes up a little bit, it comes down, it comes up, it comes down, comes up. Let's see like what else is doing. It comes down, it comes up. Like within this whole move right here, like me personally, like the way how I do my entries, and like I said, I'm gonna get into that too. The way how I see things, I do not have a valid entry yet, bro. There's not a point where price have broken a structure where I like think it's like valid. Now it have broken these little mini like structures within like let's say right here or something like that, but remember those are the ones that you do not want to like aim for. You need to like aim for like more like major structure being broken. So at this point, there's structure over here, and then there's structure over here in this area. You can see that price went down, then came up, went down, then came up, went down, then broke this point, right? This area right in here, you may think it's a minor structure, but remember what I said earlier too, the pressure. You need to see price making those big moves, because when price make big moves down, it's going to make a move up. When price makes a big move up, it's gonna make a move down. So if you had like little like scrawny moves, I'm gonna move over my chart real quick to show you. If you got little like scrawny moves like this, like these little like red like candles and stuff like that, and then you see a retracement right here, that's not valid. You know what I'm saying? And even if you did have like a big move that happened, let's say down here, there's no structure being broken within this retracement either way. So you're not gonna be having a valid entry over that side. But when you come look at this point, you have this big move, this big bearish move happen right here, and then you have like the retracement, and what do you see? On this side, structure has been broken up in this area. And I can even like mark a line just to kind of make it a little like clearer. Structure have been broken up in this area. So from this point on, this is where I'll be looking for my entry. And like I said earlier, I like to place my fib at the very lowest point, and let's say at a point where it like retraces, right? Let's say boom, okay, it never retraced right here. So price just keep going up and up and up, up and up and up, right? So as price is moving up some more, I'm adjusting my fib more and more at like points of like interest where it's gonna retrace, and I'm trying to find where price is gonna make that big pullback. Okay, so boom, we have another point where it's like wicking up and it's like looking to make a pullback. So we're gonna be waiting for a price to see if it comes back to the 50. Where does it come? To the 50, right? So once I get that move, I'm gonna go ahead and place a buy right here, or I'm gonna already have like a buy limit set right there, and I'm gonna have my stop loss at the low and then my TP is gonna be at a 1-to-1. As soon as it hits my 1-to-1, that's when I'm gonna start looking for runners and targeting maybe like the other end of our analysis box from 10 p.m. You know what I'm saying? Or maybe even like another zone like up in here or up in here, right? But I have this analysis box with 10 p.m. that's valid, you know what I'm saying? So I can use that as target points. And so once I have my entry right up in here at the 50 line, we can see, boom, price hit the 1-to-1 over here. So what I'm gonna be doing is I'm gonna be taking out partials, right? And then I'm going to be targeting, let's say, the high of that box. Let's just even say like a 3-to-1, right? So let's just move it up some more. Let's go ahead and target a 2-to-1. Actually, let's just target a 2-to-1. So now I'll take off 50% right here, or 30%, whatever percent that you want to take off, and then I'll leave the rest to run. What happened? Price flew, bro. The 2-hour time frame, I'm gonna go ahead and mark up this 6 a.m. candle right here. The top part of the wick is gonna be right here, and then I'm gonna mark the bottom part of the wick and bring this box over. So now what do we have? We have liquidity sweeping to the upside. So if we go on a smaller time frame, and now our start time will be 8 o'clock because we started on a 2-hour time frame and we are looking at a 6 a.m. analysis. So 6 a.m. plus 2 hours is gonna be 8 a.m. right? So 8 a.m. is gonna start right here. Where is price like taking liquidity? It's taking liquidity right here. So now we're going to be looking for a breaker structure, which in my opinion, from what I'm seeing, it didn't really happen. It kind of literally happened like right here. But this is another thing that I want to talk about too, my entries, right? So for my entries, this applies to every single like analysis time frame that I gave you. I look for entries on the 1 minute, the 3 minute, and the 5 minute. My favorite one to look at is the 3 minute, but sometimes there's like clearer entries on the 5 minute, or sometimes there'll be like a more aggressive entry on the 1 minute. So I use those 3 time frames to look for my entries, and you could apply that. You know, you can even use the 15 minute if you want to. I know some people may even use like the second charts, you know what I'm saying? You can really do like any like time frame that you want to do, as long as you can see clearly that price is breaking some sort of structure and you could be able to have like a valid entry. So let's say if I was on the 1 minute, right, these like little moves up in here may be major structures for me on the 1 minute. So if I go ahead and mark up like, let's just say a Fibonacci from here to here, and let's just say I get like a move down, that could be my trade right then and there. So this is a 3 minute time frame. I would have potentially saw these being like moves that could be like major zones, right? Same with the other examples that I even showed you, right? Like those like little minor zones could be the 1 minute time frame major structure, if that makes any sense. But it all depends on like preference, like with your entries, right? Like me personally, I just use like the Fibonacci. I know you can use like the order blocks, you can use like the turtle soup, fair value gaps. I'm not really familiar about that stuff. I'm only familiar with like Fibonacci's and supply and demand. So whatever you're doing right now, like when it comes to like your actual entries and stuff like that, you can stick to it. Just, you know, it's the same thing, honestly. You're just like finding that overall direction with the analysis part, right? So let's say I missed that move, right? Let's say I missed that move within this entry. So what I would be looking for is, and mind you, we're already in the uptrend. Prices like coming up, coming down, coming up, coming down, coming up right here, coming down. So where's the next point that I'm going to be looking for price to break? It's going to be right here and right here, right? So what do we get when we see price like moving over right here? We see a break right here. So now I can go ahead and stick with my original like analysis with my 3 minute time frame, start at the highest point of this downwards move and put it at the lowest point where price is like looking to retrace a lot. What do we have? We have price coming into my 50 zone and then having to move to the downside. So my entry will be at the 50, my stop loss will be at this top point of the Fibonacci, and then my TP for TP1 will be at the bottom point. So now it hit TP1 right for my 1-to-1 right in here, I believe, right? So now I would take partials and then I would just let the rest run, right? So if we see now, we can see that price is back at my entry. So if you had your stop loss at break even, you would like be out of the trade, but you would be winning whatever partial trade you made. So that's going to be this example right here. I'll probably post like what happened after this trade or something like that. I don't know. I'll put up a screenshot if I see like price like doing whatever it's doing. Yeah, so this is going to be a recording of the trade that I took yesterday. So basically within this trade, this is going to be the 2-hour 6 a.m. candle. I'm gonna go ahead and like put a screenshot on it so y'all can see it. I just know that I took a trade like before this, right, and it was going in my direction, everything was good until news came. So I had took out my trade around this point, and then this is where this big drop happened right here, right? And then that's when 8 o'clock like printed, so I knew that I could analyze the 6 a.m. candle for my analysis, right? So I knew as soon as like news printed, bro, what does price have to do? Price had to fill in that gap, most likely, not all the time, but most likely. So it was all just like perfect, like everything was just lining up one by one, right? So I went to the 1 minute time frame. On the 1 minute time frame, I was able to put a fib down here and like get this move right here to get an entry right here. And it may seem minimal for like this pullback right here, but my major confluence was that news came, and my original bias, like I said before this trade, was already to the upside. So even though news came back down to the downside, I was like, bro, like I still believe price is gonna go like up like crazy, bro. So I already had like a bias bullish. I was already in the trade. I already took profits for like partials within that trade. So this trade that I'm risking right here, like this amount that you see or whatever, is strictly from the profits that I made from the trade before. So I made two decisions, right? The entry that you see right now is an aggressive entry, and the reason it's aggressive is because you could tell by like this minor breaker structure, there's really no like quote unquote confirmation that I like, but I do know based on my like last trade and this news candle coming down, I was already in it for buys. So this is going to be my aggressive entry, and later on in this clip you're going to see that I get in a more conservative route for a second entry, and I'm only risking like the profits that I literally made from the last trade. So this was already like a risk-free trade for this day. I just really wanted to like show y'all like my trade, bro, the trade that I actually took, even if I didn't have a webcam. But for future videos though, I'm definitely gonna get my setup and like everything right. This like new view that you're seeing right now with me on the side is something completely new, so I'm just trying to like figure out my system and my setup first, and I was having a lot of technical difficulties. So like I said, on the left is just the recording, me is like me just like talking over it as like a voiceover, right? So at this point I was like, okay, like price is like definitely like filling in that gap from news, so there's a potential that it can retrace even more into my conservative entry, and then I could take a trade. Then now you can see me setting up my fib for my conservative entry, right? So this is going to be based off like a 3-minute time frame. So what you see now is me entering a buy limit at my conservative entry. So the 1 minute entry that you saw for the first trade is still active right there, and then my other trade is going to be the conservative entry based on the 3-minute time frame instead of the 1 minute time frame. This will be my first initial trade based on like market structure, right? So basically price is already like heading towards the 50 level, and I'm just getting my contracts right, trying to like get my risk accordingly, all that good stuff. Like I said, it's a risk-free trade. I'm not risking that much on my account. Boom, I set my buy limit right there, and I'm currently just waiting for price to tap into that area. I got filled in at this point right here, so you can see the notifications of me getting filled in. So basically now I am in 2 trades, one with an aggressive entry right here, 2 with my conservative entry right here. Risk-free trade for the day. But yeah, so at this point I'm just like, okay, so price can really be making a move. So as you see, price is showing that bullish pressure. It created a nice wick down here, which is like another confirmation. See, if I was more conservative, like a more conservative trader, I would put maybe like my stop loss under here, maybe, and maybe add positions or something like that. But I'd like to trust my analysis. I like to give my stop loss some room because I know price be retracing, bro. I really know price be retracing. So at this point, price was just like moving up and down, and it even came back down right there, and now it's really starting to take off into my intended TPs. Now I start to see this candle form right here, and I'm just like, wow, like, okay, I really caught this move. Like, then around this time there was another news event that happened around 9:45, and that's where you see this bullish pressure right here, bro. So this bullish pressure was like crazy because this news event wasn't really like, I don't think it was like a major event, like, because mind you, this was at 9:45, so it was a red folder news event, but it wasn't something that I usually see, you know what I'm saying? So I wasn't really expecting like much of it, but this move really was like the X factor that really pushed my trade into profit, right? And this is what I say by like news trade, right? I didn't hold my news trade through this 8:30 run because I already knew this trade was going to come with a lot of pressure, right? So after this 8:30 trade came, I was like, all right, bet, like, let me see if I could get like another entry. Let me see what the analysis is doing. Once I got my entries and stuff right here, and once I noticed that there was more news like coming along, I was like, you know what? I'm just going to hold it through this news event because it's not really like, I don't think that it's going to move a lot. I didn't think that it was gonna make some moves because it was like 9:45 and stuff like that, but it did make a very nice move to the bullish side. It wasn't like this where it just invalidated my whole analysis, right? But it made like a nice move over here too. So that was cool too, that I really didn't get like demolished by that news event. And currently right now, like, we were just looking at price. Like, I think I went to a lower time frame. I went to the 1 minute just to see more structure and price printing, and then we had more pushes. Right now, this is what I want to bring up too. There was another news event at 10 o'clock a.m. bro. I was debating to close, because the only reason I was debating to close is because I did not want to hold my trade through another news event. I already don't like doing that. I already felt like 9:45 was like an acceptable one to hold through, because, you know, it wasn't really like major like the other big bearish move that you saw on the previous one, right? And what's crazy is that when I closed this trade, right, I thought I had passed, right? And I did pass. My profit target was $2,000, and I went over the 2,000, but it came back into like below 2,000 because of the commissions. So I was like on Apex's Discord asking them, okay, do I need to close above 2,000 or do I need to just reach 2,000? So they said I need to close above 2,000. So at this point, I'm just like, okay, I could just come back tomorrow and just, you know what I'm saying, like get that $20 and then, you know, just like go about my day or something like that. But then I started seeing more like analysis on the 8 a.m. 2-hour time frame, I believe. So I also have another video recording for that too that I'm going to showcase right now. So for this trade right here, this is going to be my 2-hour analysis on the 8 a.m. candle, right? It's literally the same day, the same exact day, like literally back to back from what I just showed y'all. And from this point on, you can see that price like went up, went down, went up, went down, went up, and it broke through here, right? So it broke this structure right up in here with this downwards move. And remember what I said, I like to start my fib right at the very top of like the start of the move. So I started at the top, and then I put it at the point where it retraces the most. Price had came all the way up to the 50. I think I had waited, right? I think I had waited because I wanted like a better like entry, I believe so, but I could have still got at the 50, you know, it would have been cool either way. But this trade I had gotten at the 61 entry, right? Price was already at my 61.8 level. So what I had did was I had set a sell stop. So as soon as price came right here, it was going to get me in for a sell, and all I really needed was this 1-to-1 right here. And I believe I'm not in the trade just yet. I think it was like one tick until it like filled me in, so it's not quite there yet. So from this point on, you can see that I got tagged in, I got filled in for my trade right there. Like this trade is what I literally needed to pass my challenge. All I needed was a quick 1-to-1. Basically price had just like really went straight down, honestly, for the most part. I could like play it out, but y'all could already see what happened. My TP got hit for a 1-to-1. So throughout me showcasing the strategy, remember when I said for my 1-to-1s I'll take partials and then I'll let the rest ride? I don't really take partials when I'm taking a challenge, but when it comes to like a funded account, when I go to trade on my funded account or like my personal account, that's when I start to take partials and start securing stuff, because that's like my actual, you know what I'm saying, capital. Like, you know what I'm saying, it's like my funded account is going to be like the capital that I earn to trade with, where I can use to make withdrawals. Then my personal account is going to be when I could like withdraw whenever I want and stuff. If I'm taking partials on a challenge, for me personally, I feel like I'm kind of like restricting myself back a little bit, but that's just me. And it's like, it's nothing wrong with it. It's nothing wrong with taking partials with a challenge, for sure. I just wanted to get it over with. And like I said, this only took 2 days. I made the decision not to like trade for the rest of the week, so I'm gonna trade like next Monday, but I'm still gonna be like looking at the charts, like upping my skills, and I'm still gonna be collecting data on like my wrinkle strategies and all that stuff too. So yeah, that's pretty much all I really got going on. And yeah, I appreciate y'all for tuning in. So y'all be blessed, y'all be safe, and I'm out.